Hello and welcome to Property Mavericks. You see, due diligence in real estate is really where it all begins. While many people think that due diligence is just running the numbers, what's the cap rate, what's the cash on cash return, we at Property Mavericks believe that it's so much more than that. That getting to know what the market conditions are doing in the area of the country that you're going to be playing with, getting to know the resources and background and resume of your team member, and then putting different acquisition strategies in place. And then oftentimes, more importantly, investors forget about any kind of real exit strategy, whether they're going to be selling to investors or owner occupied or whatever it is. So off we go to talking about the 4 keys to successful due diligence. So getting to know the numbers. What are your requirements is really where you have to start at. And what are you playing in this game for? Are you playing for cash flow? Are you playing for cash, appreciation, tax benefit, wealth building strategies? So knowing where you're starting from is really key to where you're going to end up. So, some investors may need to put real estate as a tax strategy in place. Other real estate investors, oftentimes ones just starting out, need to make more cash. And then as you mature in the industry, putting more cash flow in. So the types of numbers, the types of formulas, and the way that you analyze a property really is very incumbent upon where you're starting out from. So what numbers are important? And the numbers are important based on the type of deal. So I wouldn't use a cap rate, for example, for a single family rental. And I wouldn't use, an internal rate of return on a fourplex. So let's start with cap rate. So the cap rate is basically the net operating income divided by the property value. And oftentimes this is a percentage that's used, and we use it to see what areas of the country, what models are similar. The cash on cash return is the cash flow divided by your invested capital. We use this a lot for our smaller properties. Am I getting a 22% return, a 20%, 15%, 30%? Then I want to look at your debt service coverage ratio, which is your net operating income divided by your loan payment, and your gross rent multiplier, which is your property value divided by your gross scheduled income. And then your internal rate of return, which is basically your annualized effective compound rate on the invested capital. In other words, your yield. And then a very important number that we use for a lot of our investments and kind of a starting point for where we're looking at is the net operating income. And that's the gross operating income minus the total operating expenses. And this is all before debt service. So which numbers for which type of investment is really critical, but as you become more efficient in this business, you need to know each of these numbers and how they relate to your projects. The second part of our due diligence keys are knowing the market. Well, due diligence, many investors stop at the numbers, but you always have to ask yourself, what's going on in this market? Some of the keys that we always consider are job growth. Are there new companies moving in, creating jobs? Is the overall economy slowing down and losing jobs? What's the historical appreciation rates been? Has it grown at 2%, 5%, 10%? Are there any tax benefits included in this market? Some cities and states offer tax incentives for investors coming in. We do a lot of investing in the go zones where there are very significant tax strategies going on. What's the affordability index? How is the cost of housing compared to the income of that area? And then rent rates. What are the rental rates compared to the purchase prices? So, playing in California, you're going to have, a $300,000 rental property, and that may only rent for $1,500 a month, but in the Midwest or the South, you may get a $50,000 property that rents for $900 a month. And obviously, which one makes more sense from a cash flow play? So you want to know what's going on in the market, because again, when we talked about exit strategy, where do you believe that this market is going to be 2 years down the road, 4 years down the road, 6 years down the road. So, key number 2 to an effective due diligence is really getting to know the market demographics and how your property is going to benefit positively and negatively. Let me look at strategy versus market. So one of the things we see when coaching, the hundreds of people that we coach, is many investors are stuck trying to make strategies work in markets where they live. And we believe that this is the opposite of how a successful investor should act. A market must first and foremost support the strategy. So, for example, if you're going to be doing cash flow rentals, you're not going to do it in, California or Boston or Phoenix. I mean, you want to look at markets that where the rents are significantly higher than the cost of houses. So, and if you're going to be doing in fixing and flipping for, owner occupied, how does that market fit for that? So don't be afraid to stretch out of where you live and go research, hundreds of markets across the country that really, really work. So the third key to an effective due diligence strategy is getting to know your team. So when working in an out-of-state market, it's important to have a solid, qualified team of professionals to support you in your investment. And it's up to you to completely check them out. So are you running their background? What's their resume? Can they show you a book of business? Can they show you records of properties that they've completed successfully? What kind of referrals can they give you? Can they give you the names and phone numbers of people that they've worked with, that they've done work for, to show that they're a stand-up team member? What kind of results from past deals can they show you? Can they open up their books and say, okay, here's a property that we put this strategy to, we made this much money on it, and it took us this long to complete it, right? So, and then depending on if I'm going to be giving partners a lot of money or using my cash to give to them, I may and oftentimes get a official background check where they check their credit, where I check their criminal record. I want to make sure, if I'm giving a significant amount of money to somebody, I want to make sure that I've checked them out. So the third key is just as important, is making sure that you're vetting out the team, whether they're partners or whether they're contractors or whether they're just resources that you're using. You want to make sure, if you're working out of state, that you've really vetted out your team. Be profitable again. Exit strategies is an area that many investors that we coach seem to overlook. They get so involved in looking at the deal and looking at making money on it that they totally blow by how they're going to put an exit strategy to it. So you want to make sure that you're putting a clearly defined exit strategy before you purchase the property. And you want to look at things like, how long is the holding period? Who will the target buyer be? Are you going to be selling this property to an owner occupant? Are you going to be selling this property back to an investor? And then what is the impact of selling costs to the investment? So have you included, fees for realtors, for lawyers? Have you included fees for marketing and advertising the property? So, really absolutely critical to your due diligence is to make sure that not only do you have, the numbers, the market, the team, but you have a solid exit strategy. And oftentimes when we play, we look at multiple strategies. We look at a plan A and a plan B. For example, we do a lot of fix and flips where our plan A is to sell them to investors. Well, if I can't sell it quickly to an investor, my plan B is to refinance it and hold it as a cash flow rental and wait for that market to come back around. So with that, we've touched upon the 4 keys to a successful due diligence process. Now, there's a whole lot more that goes into this, and if you're interested in learning more, our real estate training program, Real Training Institute, is dedicated on providing the knowledge, teams, tools you need to build profits through real estate year after year. I want you to go to www.realtraininginstitute.com and download our free 6-week email training course to see a little bit more of what we're all about.